Hey everyone, with the completion of the month of May, it's time to reveal my top stock to buy for June and the rest of 2024. I've been doing this update every month, letting you know what my top stock to buy is and giving you an update on how that stock has performed. I'll do it again here in this video. Now, before we reveal what the top stock is, let's look at the S&P 500 overall, which has returned 11.23% year to date in 2024, including dividends. The market has been fueled by better than expected macroeconomic performance. Job growth has remained strong. Consumer spending has remained strong. Even with the backdrop of higher interest rates, the fears of a recession have been cooled down. So all of those are leading to stronger than expected market gains in the first part of 2024, and it looks to be shaping to be a good year in 2024. So let's take a look at what my top stock to buy is right now. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now. All right, my top stock to buy remains unchanged. It's Alphabet. Alphabet has been my top stock to buy all year long. I made this recommendation first on December 30th, recommending Alphabet as the best stock to buy for 2024. And it has performed relatively well, delivering so far 23.44% for investors in 2024 year to date. Now, that's more than twice the return you would have gotten if you invested in the S&P 500 index. You would have doubled the return, more than doubled the return. So Alphabet has already delivered excellent performance, and I suspect it will continue delivering excellent performance because the stock is still relatively cheap, trading at a forward price to earnings of 20.36 for the GOOG shares and 20.18 for the GOOGL shares. By the way, if you want to pick between the two, I recommend the cheaper GOOGL shares. And I think at current valuations, Alphabet stock is still a bargain given the risk versus return it provides investors. Now, Alphabet is the most dominant advertising company in the world, and digital advertising is projected to grow significantly over the next several years. Now, here I have a projection according to Statista, which forecasts digital advertising spending worldwide from 2021 to 2027. It's forecasted to grow from $601 billion in 2023 all the way up to $870 billion by 2027. And Alphabet, being the most dominant digital advertiser in the world, is going to benefit from this trend. Its Google search engine gains dominant market share. Meanwhile, YouTube boasts over 2 billion monthly active users. And digital advertising compared to linear advertising is much more effective. You can measure your results better. You can target to specific audiences, and that makes it more attractive from a business, from a marketing perspective. Moreover, if you zoom out even more, advertising will remain an integral part of our economy, I think, forever. I don't think there will be an end to advertising. That's because most of the trillions of dollars that are spent worldwide are unnecessary spending, right? We buy things that we don't really need, and those things are supported by advertising. You need advertising to support purchases of non-necessities or non-essentials. That's what drives, the whole car industry basically is supported with advertising. Without advertising, would anyone pay $100,000 for a luxury vehicle? I don't know. I don't know if that will be a thing without advertising. So it's an ever increasing important part of our economy, and it'll grow along with the economy. And the other factor that will be helpful for Alphabet is that digital advertising will continue to take a larger share of overall advertising because of those benefits I highlighted earlier. It can be more targeted, it can be better measured. And so that's why it's favored among businesses worldwide. Already in the last 10 years, Alphabet has grown its revenue to $318 billion, up from around $80 billion in 2015. The company demonstrates strong revenue growth as it continues to benefit from the advertising spending. And now, with the help of artificial intelligence, it's developing new revenue streams, even though Alphabet is admittedly fumbling the initial rollout of AI in terms of the consumer-facing large language model. Still, it doesn't need to be the best in class in order to benefit from the rising effectiveness of AI. It will still reap the benefits, reap the rewards from investments in this category, and it will improve its offerings to enterprises. Moreover, Alphabet generates 33.66% in cash flow to sales, cash flow from operations to sales, meaning every $100 in sales for Alphabet turns into $33 in cash flow. Much of that revenue turns into cash flow because of the lucrative business model. It's a digital business. It doesn't need to spend money on each incremental revenue that comes into the business. It invests in the categories, in the offerings, and then it reaps the benefits of those investments. Moreover, the business YouTube, which you're probably watching this video on YouTube, is an extremely lucrative business model for Alphabet. It benefits from the creativity of folks like myself who make videos, post the videos, and then YouTube keeps half, I believe, of the revenue, the ad revenue that I generate on this platform. So think of how many thousands and thousands of, maybe millions of creators on YouTube that are just making this content for YouTube, and it just reaps the benefit of the creators. So it's an incredibly lucrative business model that I think will support Alphabet's growth longer term. And finally, the operating profit margin is also excellent at 29.03%. Advertising is a lucrative business model. I've been highlighting that with many of the companies in this industry, including Meta Platforms, and lately Amazon's even been getting into advertising, which is really boosting its profit margins in recent years. So overall, all of these factors lead me to still be bullish on Alphabet stock. And even though the stock price is up 23% year to date, I still think there's room to run because the valuation is still cheap. Alphabet started the year trading at a valuation of a forward PE around 16, and it's only increased to about 20, a forward PE of 20. So it's trading at roughly the same price as the average stock in the S&P 500. So the valuation isn't rich for a company with its prospects, strong cash flow, profit margins, market share, competitive advantages, pristine balance sheet in an industry that's near $1 trillion and growing, all of which would warrant a higher valuation, but you're not having to pay a higher valuation for Alphabet stock. So for all those reasons, Alphabet's still my top stock to buy now. Before I let you go, let me tell you about the greatest deal on YouTube. With just a click of a button, you can get free financial analysis from a professor with decades of investing experience. So what are you waiting for? Hit that subscribe button, and I'll see you again soon.